The battle between the US and China isn't fought with tanks or soldiers. It's waged in boardrooms, factories, and shipping lanes. For years, the two largest economies in the world have been locked in a trade war that has sent shockwaves through industries and markets. It's not just about numbers on a balance sheet. This struggle affects everything from the price of your smartphone to the future of electric vehicles. Among those caught in the crossfire is Tesla, a company that's become a symbol of innovation but now faces serious challenges from this economic standoff. If you're enjoying this breakdown of global trade battles, don't forget to like and share this video. It helps us bring you more content like this. The current trade tensions didn't appear out of nowhere. They escalated under President Donald Trump's administration launched a wave of tariffs aimed at curbing what it saw as unfair Chinese trade practices. The idea was to protect American jobs and industries from a flood of Chinese imports, but the tariffs covered a massive range of goods from solar panels to steel and washing machines. China didn't take this sitting down. It retaliated with its own tariffs, hitting US exports like soybeans, bourbons, and automobiles. This tit-for-tat strategy quickly snowballed into a full-scale trade war, raising prices for consumers and creating uncertainty for businesses on both sides of the Pacific. What started as an attempt to protect domestic industries turned into a global economic chess match, with industries like the automotive sector feeling the brunt of the impact. The automotive industry was one of the first major sectors to suffer. China imposed a stiff 25% tariff on American-made vehicles, making it significantly more expensive for companies like Tesla to sell cars in one of their most important markets. But the pain didn't stop there. Tariffs also hit essential auto parts, driving up production costs for manufacturers. For Tesla, this was a major setback. Either Tesla had to absorb these costs, cutting into profits, or pass them on to consumers, making their cars less attractive compared to domestic alternatives. China isn't just another market for Tesla, it's the biggest one outside the US. The company has invested heavily in the region, most notably with its Shanghai Gigafactory, which was designed to cement its presence in China and reduce dependence on costly imports. This factory has been a game changer, allowing Tesla to produce cars locally and sidestep some of the trade war's harsher consequences. But this advantage comes with risks. The Chinese government could use its regulatory power to make life difficult for Tesla, whether by delaying permits, imposing new restrictions, or tightening local content requirements. In the high-stakes world of international trade, today's opportunity can become tomorrow's liability. Speaking of opinions, what do you think? Should Tesla double down on its China's strategy or look elsewhere? Drop a comment below, we'd love to hear your thoughts. Tesla isn't just battling tariffs, it's also facing a new generation of Chinese EV manufacturers like BYD, Nio, and XPeng. These companies ain't just making cheap knockoffs, they are producing high-quality, competitive electric vehicles with a strong government backing. With generous subsidies and a rapidly expanding charging infrastructure, China is fostering a business environment that favors homegrown brands. This local competition makes it even harder for Tesla to maintain its foothold. Chinese consumers have more choices than ever, and nationalist sentiment might encourage them to support domestic brands over a foreign-one like Tesla. As these companies continue to improve their technology and expand production, Tesla's dominance in China is far from guaranteed. So what can Tesla do? The company has a few possible moves, but none are without risks. One approach is to further localize its supply chain, producing more components in China to reduce reliance on imports. This would help avoid tariffs and align Tesla more closely with China's economic goals. However, it would also require heavy investments and increase Tesla's exposure to Chinese regulations and policies. Another option is to simply weather the storm. Tesla could absorb the short-term losses, betting that tensions between the US and China will ease over time. This approach requires deep financial resilience, but it could pay off if trade relations improve in the coming years. The most extreme move: exiting Chinese market entirely. While this would shield Tesla from trade war uncertainties, it would also mean walking away from a massive revenue source and ceding ground to local competitors. Given Tesla's ambitions to dominate the global EV market, this seems like the least likely path. The future is uncertain, but a few key factors will shape what happens next. Consumer sentiment in China will play a huge role. If Tesla can maintain its brand loyalty despite higher prices, it might weather the storm. However, if Chinese buyers start favoring domestic brands en masse, Tesla's market share could take a serious hit. Government policy will also be crucial. A resolution to the trade war, or at least a reduction in tariffs, would relieve some of Tesla's biggest headaches. But if tensions escalate further, new restrictions could make it even harder for Tesla to operate in China. Beyond Tesla, the US-China trade war highlights the deep economic interdependence between these two global powers. Decoupling is easier said than done. Many American companies rely on Chinese manufacturing, just as Chinese firms depend on US technology and capital markets. This trade war is not just about two countries. Its ripple effects are felt worldwide. For now, Tesla remains at the center of this economic battle, navigating a landscape shaped by politics, competition, and shifting consumer preferences. Whether it emerges stronger or weaker will depend on the choices it makes in the coming years. If you made it this far, you are clearly invested in global trade and its impact on major industries. Hit that like button, subscribe, and ring the notification bell so you don't miss out our deep dives into the world's biggest economic battles. Thanks for watching.